Good morning, team. This is the Pup of Wall Street, and we're looking at my daily watch list trade ideas for this week. So we've got 14 charts that I like moving into next week. So first up, this is ANET, Arista Networks. This is a 65-minute chart, and what I'm looking at here is a setup for a breakout over 329.20. You could see resistance on Monday, Wednesday, Thursday, and Friday. And if we went down to an even lower time frame, you'll see that this is an ascending triangle right at the prior resistance from May 16th. So you got a nice rounded cup base here. Nice consolidation inside the wedge. So over 329.20, we're looking for a move up to 339. All right, next up is ticker LEN. This is Lenar Corporation. What I like about this, we have bullish, Williams percent R divergence. So that's bullish divergence. Williams percent R is making a higher low, while price is making a lower low. We are in an a descending triangle, right, where you have a flat bottom and a series of lower highs. So for this, what I would like is maybe potential backtest support of the support zone. That's between 148 and 149. You could take an entry there for a target of 155. Or if we break over 156, we have the swing high anchored VWAP here. Then we could see a move up to 163 and potentially back up to the 172 highs. All right, next up is Spotify. So Spotify, let's grab this tool right here. We bounced at the back test and the gap fill from the gap up 2 weeks ago. Right, I believe that was the earnings gap. Right, we had a TTM squeeze fire. It fired higher. We hit the top of the rising wedge, and then we came right back down to the bottom of the wedge. So for this week, what I'd like to see is a move over 314, back up to 326, and then potentially to the high of the wedge at around 330. Right. The other thing we could watch for is maybe a back test of the wedge bottom, where we would use 300 or just under 300, maybe 299 as the stop loss under the wedge. All right, next up is Netflix. So Netflix has been on a tear since that massive gap down a few earnings ago. Again, this is a daily chart, new 52-week high. The 2021 highs, 693.81 are in sight. Watch for a back test of 644 for a move back up to 693. All right, next up is SX. This is a head and shoulders setup. So you have your left shoulder, you have your head, you have your right shoulder. This one already started to break down. The trade alert went out on 5/31. This one officially broke down on Thursday, continuation to the downside on Friday. What I would watch for if you missed the entry is a back test of support at $33. If you see a failure, and that would be another opportunity to take this to the downside to $29.26. All right, next one up is Dollar General, ticker DG. This is another head and shoulders setup. Been seeing a lot of these head and shoulder setups. There's probably a good 5 or 6 that I found from just the names that I watch. So I could just imagine if I were to scan, I would probably find a dozen or more IWM. So what are we looking for here? Well, we're looking at 122.56 as the neckline. A break below could see a move to 115. Now, keep in mind the TTM squeeze has already fired, and it fired to the downside. You can see the move that it's already made. So it is logical to assume that we might get a little bit of a bounce first before we ultimately head back down. So just be mindful of that. I am seeing a little bit of bullish divergence as well. So this could be an area to potentially take long with a stop under 122.58. But what I would do is target 134 to the upside and then watch that area for resistance for a potential short to the downside. So, you know, a lot of ways to play these types of charts. You could play the bounce off of the pattern setup, or you could actually take the breakdown from the pattern setup. All right, here's another one. Head and shoulders setup. Right, we have your right shoulder, your left shoulder, your head, potentially your right shoulder building here. So what I want to see here, again, just maybe a little bit of a right shoulder forming, and then the breakdown of 33. Your first target is $30. Your second target is $21. All right. Next up is CROX, ticker CROX. This one is a cup with handle. There's a very shallow handle. Generally, I like to see a 50% retrace on the handle, but sometimes you get these shallow handles on very bullish stocks. So this one broke over the cup and handle neckline. It hit the upside target of 158. It pulled back. It undercut the neckline just slightly right before it went right back higher. So two ways to play this. You can play the breakout over 158, targeting 164 or 173. Or you could wait for a back test again at 147, and if we hold and bounce, you could play this right back up to 158. All right, next up is IBB. This is your Biotech ETF. So here are some of the individual names that you could look up to see which charts make the most sense for you. But what we have here is topside resistance at 138.43. And then we have a series of higher lows, right? There's about 3 higher lows right there, or 2 higher lows off of the, actually no, there is 3 higher lows here. So yeah, I mean, for this, what I'd watch for is probably a break over 138.60, right? You target 141, 145, 152. You could take an entry here off the open with a tighter stop loss under 134, right, and front run the breakout, but that's all depending on your edge and your style of trading. All right, next up is Microsoft. So here's another cup with handle, right, very clear cup. This is about a 50% retrace handle. That's exactly what you want to see. Here's the breakout candle on Tuesday, and then Wednesday, Thursday, Friday, right into the 1272 extension at 443. So what I would watch for here is either a back test of 430 and a hold and bounce. Then you could take this back up to 443, or a break of 443 could send us to 457 to the upside. All right. Next up is RKT. This is Rocket Companies. So here's your low, here's your higher low, here's your second higher low, right into $15. This is a volume compression pattern, or a VCP. The trigger entry for me on this one's going to be 1504. A couple of things I really like about this. We have above average volume here on the push higher. We have a slingshot squeeze setting up. This is when momentum initially shifts to the downside and then pushes back higher. It acts kind of like a slingshot where it'll shoot price higher. Right? And then what I would like to see is on that break of 1505, an initial push up to 1635. And if we break 1635, 1784 to the upside. All right, next one up is AAON. So I have the anchor from the 5124 candle. You could see resistance, 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 resistance. And then you have your 236 retracement at $76.46. This also has a slingshot squeeze setting up. MACD's already crossed over, and this has probably about a month long, about a 6-week long bullish divergence. And again, what that means, that's on Williams percent R. And what that means is price is making lower lows, while the Williams percent range is making higher lows. So for this, very simple, the break over 76.46, target 80, 83, 86 to the upside, potentially 90 and 96 if we get a strong continuation. All right, next one is Boeing, ticker BA. Not really my favorite name to trade, as you all know if you've been following me for a while. But I did anchor from the gap down candle. I had posted this one on social media and had a question from a follower, why didn't I anchor to the swing high? And that's a valid question, and I think it's a good point. When I anchored to that swing high, there was a lot of points of deviation on the anchored VWAP. And when I see a lot of points of deviation on the anchored VWAP, to me, that tends to not act as a good signal for potential resistance or support, depending on where the trade is, right? So what I did was, you can anchor to swing high, a swing low. You can anchor to a week to date, a month to date, a year to date. You can anchor to earnings. You can anchor to a major breakout or a gap down. And so in playing around with the gap, with the different anchors, I found that this anchor from the gap down, although not important in the beginning, once we broke down from this wedge, we back tested the anchor here and got rejected. And we just tested the anchor again here, and look at the perfect rejections here. 2 candles there, 3 candles there. Right? And so now what I'm seeing here is a bear flag forming on Boeing. So here's your, series of higher lows, your higher highs and higher lows, right? So the tricky thing with Boeing is they're very prone to news, right? An issue with an aircraft, a potential contract that they land. And so it's very difficult to hold this type of name in the shorter to medium term, because you just don't know what news event is around the corner that's going to potentially push this stock higher or lower, right? But if we're going to look at it from a technical point of view, I like this for a break under 176.49, for a test of 171.54, and potentially a full breakdown to 163.40. All right, last but certainly not least is Mr. Cooper. This is ticker COOP. And you could see this one riding the 21 EMA. That's your white line, right? And now we're starting to break under it, but we are consolidating sideways. And we have been consolidating sideways for about 6 weeks now. And the one thing I noticed is that you have this lower low here on price, but you have a higher low on the Williams %R, which again is bullish divergence. I'm also seeing that the MACD is starting to flatten out. So what I'd want to see is that MACD curl over and cross. But we're also seeing a slingshot squeeze setting up. And again, that's when the TTM squeeze momentum is shifting to the downside, and then it starts to shift to the upside. It acts like a slingshot. And the other thing I saw on this undercut was above average volume. So price is getting defended at $80.60. I think that's your risk to the downside. If we continue to test 80.60, you could take an entry here. Not sure what the options chain looks like, but you want to take a look at that, see how liquidity looks, see if there's enough volume there. If there is, maybe the 85 calls 2 months out can work. But for me, shares probably make more sense. And any buys or dip buys from, let's say, 78 to 80, you can accumulate there with a stop loss at maybe 76 for a target of 85 and 88 to the upside. All right, that is the 14 names that I'm watching for this week. Of course, there's going to be other stocks that I'm going to be watching that may pop up. I'm always looking for news events or upgrades or downgrades. We had kind of a rough week last week trading. I had mentioned the week before last. Last week was probably a week to take off and not stay on the charts too long, right? You had CPI, you had PPI, you had the FOMC rate decision, you had Jay Powell speaking. I mean, there's a lot of events that went on last week that just pushed price back and forth in a range. So hopefully what I would want to see this week is a little bit more range in the markets, in SPY, in the Qs. IWM has been a bit of a dog, right? It's been trading to the downside, so might be an opportunity there as well, but I would like to see some further price action above and holding above 200. But yeah, I mean, this is kind of where we're at. This is still going to be a stock pickers market, where we're going to see individual names with either relative strength or relative weakness. And our job as traders is to determine, does this particular chart fit my criteria for a day trade or for a swing trade? Does it adhere to my edge? Will I be able to follow my rules and take this trade? In the end, as traders, those are the questions that we have to ask ourselves, and then we have to determine, what our entry is, what our risk to the downside as far as a stop is, and then what our price targets to the upside are going to be, and where are we going to take profit, right? Answer those questions before you take any of these trades. And again, certainly not financial advice, but these are the types of names that I like. These types of setups when you have multiple indicator pointing in a particular direction, you take the trigger, you put your stop loss in, and you ride the trend until the end at the end. All right. Hopefully that makes sense. Hope to see you back again tomorrow. I'll have another short video. These Monday videos, they're a little longer because I do a lot of research on the weekends, looking at my scans, looking at the different watch lists that I have to find these criteria setups that I like. So throughout the week, I'll have one or two maybe per day in addition to these. And then, of course, in the room, I'll have all these alerts on the triggers set up for you to follow along. The trigger alerts, it goes into my journal, then follow the link, look at the trade plan, and determine for yourself if this is a trade that I want to take. All right, take care, good luck this week, and I'll see you soon.